So far, Bitcoin has been giving hell to many investors, but those of us who still have faith in its return have been able to see a few signs of a possible future recovery, both for Bitcoin and cryptos in general. Today, Gareth Soloway, founder and chief market strategist at InTheMoneyStocks.com, joins us to share his insights about the crypto market, the crypto bottom, and the future possibilities and challenges traders could face in the coming months of 2023.
Yeah, so one of the things to note on Bitcoin is that you had this trend line that started right at the FTX high, and I have to call this the FTX high just because right here is where the decline began when FTX began to be uncovered as a fraud, right? So what I was following was this trend line here, and then this one to the downslope, right? And once we broke above it, that's really where you got this kind of short squeeze, asset values, again, kind of this re-energizing of buying pressure in Bitcoin. But what I said earlier, we touched on it, is look at where price stalled out, right at that technical level.
The FTX scandal took the crypto markets totally by surprise and wiped out billions of dollars off the market overnight. Not to mention the trust factor that also took a heavy toll. It's no wonder it's called the crypto's Lehman Brothers moment. As you can see, Gareth tracks the trend line of Bitcoin prices starting just before the fall of FTX and analyzed the price level at the line that got broken. But here's the thing. Right at that point, all signs seem like they are leading to a recovery and an asset price recovery. But Gareth has different insights. Let's hear it from him.
For me, this is a scenario I'm watching closely. Like overall, my macro view is still that Bitcoin likely hasn't bottomed. My macro view, the reason I think that is that I've never seen a bottom in an asset where there's so quickly so much bullishness. And I flip on Twitter and some of the influencers everyone is just so bullish so quickly. Usually if you go back to the 2009 lows in the stock market or the .com lows, the first 30% move up off of the lows, everyone is very scared. And you're not seeing that just yet. At least to me, I'm not seeing that panic.
It might come as a surprise to you, but the way Gareth analyzes it, this much of a fast recovery and so much bullishness in such a short period doesn't seem normal at all. Not normal at all for an asset that took a sharp and hard fall. And compared to other bubbles that burst, specifically the early 2000s .com crash and the 2008 market meltdown, all the investors were skeptical about the first 30% upward momentum in the market from all-time lows. And it took a considerable amount of time afterward for the markets to return to their pre-crisis levels. But this unusual optimism and bullishness we see in the crypto markets, along with all the celebrations by influencers and experts about that, is a cause to be even more cautious. Now you might say I'm being a naysayer, but the next question I gotta ask you is, do you think we are still at the bottom of crypto? If that's the case, how do you support your argument? Let me know in the comments below. I want to get your side of the story. But according to Gareth, we're still not at the bottom. That means we have more to fall, right? That's bad news. So why does he believe in this scary scenario? Let's hear it from him.
The other thing that bothers me about Bitcoin potentially being already at a bottom, and why I think it's not, is that the Fed stopped printing money and they're actually sucking money out of the system. Every previous bear market in Bitcoin saw an 80 to 85% decline with stimulus, with low interest rates, right? Since 2009, the Fed was always doing QE. So it's hard for me to get my brain around how the Fed could stop QE, suck money out of the system, yet somehow the bear market in Bitcoin would be less than previous bear markets. So there's a few different things here. The other thing would be also the downtrend. If you zoom out on this chart, this is the bounce everyone's getting excited about. Now, if it was all the way up here, yes, at that point there's a break in trend, but we still haven't had a major break in trend yet. And so I want to see price prove itself before I start getting. Right. So for me, there'll be buy levels. There'll be a swing trade, quick swing trade. If we pull back, let's see here. Let's say Bitcoin dumps back to about 18,500. I could play that for a quick bounce. Then you have this level here and eventually double bottom. These are just quick little trading opportunities.
We have to admit that at the end of the day, It all comes down to macroeconomic conditions, trends in the border market, and price level actions. And you also have to admit that these are just not under our control. As he points out, Feds, after an unprecedented money printing rampage, are now sucking the money out of the system for the very first time since 2020. And historically, Bitcoin has always seen declines. Not small ones, but steep declines with stimulus and low interest rates. It's just too early to come into any conclusion that this new policy is going to lessen the bear market. And then there is the downtrend. You and I both love to hear on the news and see on the charts that Bitcoin has recovered from the FTX collapse, but let's be real, it's only been a few months, and this is just one of those short-term spikes we all wait desperately to make some money on and get our hopes up. But if you expand the time horizon on these charts and analyze the data rationally, we're still in a downward trend that has the price level bouncing up from time to time. And that is in no way a healthy signal for a recovering market that is about to prosper. As always, Gareth doesn't forget to share some drops of his wisdom with the traders. And now is the time to listen and learn.
Everyone wants the simple, what's the simple direction? Just tell me where it's going. Not like, if it goes here, that's great, and that's what I think is going to happen, but if it breaks this level, that's a technical breakdown. And so, one of the things I always tell people is people always ask me for technical levels as well. And even with technical levels, it's not quite as simple because there's a time factor involved in levels, right? So for instance, if we come down, let's say $20 is a technical support. Let's say we come down to $20.50 on a chart, and then you start making a bear flag just above 20 bucks. I'm not going to like $20 anymore because now you have a bear flag just above that level, and there's too much risk you can flush right through. So people have to understand that it's not as simple as kind of black and white in trading, and you need to be kind of looking at these other factors.
Everybody wants to know the direction. And if everyone could know that, every one of us should be successful millionaire traders. But trading isn't just technicals and signals, that is a reality you have to accept. Once you add in the time and the macroeconomics, it becomes way more complex.
The things a good trader is doing is watching what type of pattern formation is created off of this. So for instance, keeping a very close eye on whether or not, and let me put this in here, parallel channel, right? Is this the beginning of bullish consolidation? If we stay inside of this consolidation, let's say for another week or two, then honestly, I would agree with you. Then that's the chart telling you it's going to go higher. And so, yes, right now I'm into saying, okay, we don't have a bull flag yet, so we could pull back. But that may change, and I may say, okay, time to hop long here for a move up to, next resistance would be 22.5. Then the big one is going to be around 25,000.
The best traders out there pay attention and look closely at the broader market pattern formation. And guess what? You can only see them if you are patient enough over the long term. You won't make it if you are here to make a few bucks on the short term, as that's a recipe for disaster in the current market.
The risk management is everything for a trader, right? So, like we talked about a little while ago, if you make money on 7 out of 10 trades, you're a Hall of Famer. But if on your 8th trade you lose everything you made in your first 7, then what's the point, right? This is you're absolutely right. Everyone wants what's the simple direction?
And as always, remember that as a trader, risk management is everything. Forget that, and you'll end up like SBF for sure. All were wiped out in a single day. For a trader, that will be a single trade. As always, don't forget to share your take on this. And don't forget to hit that subscribe button to get brand new insights into the crypto markets. Check out our other educational videos, and I'll be back soon with another one.